In today's global economy, time is arguably the scarcest resource for high-impact leaders. Among them, Elon Musk stands in a category of his own. This is not simply because of his role in electric vehicles, private spaceflight, and AI development, but because of how he structures every single day. He has spoken openly about dividing his schedule into 5-minute blocks, an approach so extreme that it challenges conventional thinking on work-life balance. In an era where digital distractions rise and productivity tools multiply, his method invites a critical question. Can extreme time discipline actually determine the difference between ordinary output and extraordinary success? The question at the heart of this discussion is straightforward. Does such a rigid, micromanaged schedule truly drive innovation and results? Or does it create risks that can undermine long-term performance? The idea of managing time with precision is hardly new. Benjamin Franklin maintained a meticulous daily plan in the 18th century. Industrial icons like Henry Ford structured their work hours to oversee factory operations with maximum efficiency. In post-war Japan, manufacturing leaders embedded Kaizen, continuous improvement, into their routines, segmenting tasks to optimize every minute. Across history, one pattern emerges. Leaders who seek transformational outcomes often turn to disciplined time structures as a competitive tool. Today, Musk's obligations span multiple industries. At Tesla, he oversees design, engineering, and production. At SpaceX, he drives technical problem-solving and launch strategy. Add to that ventures in AI, tunneling infrastructure, and social media operations. Interviews suggest he works between 80 and 100 hours per week, dedicating long blocks to deep technical work, interspersed with meetings requiring rapid, high-stakes decisions. Sleep is reportedly limited to about 6 hours a night. Personal and leisure time is compressed into brief evening slots, making him an outlier among even the busiest global executives. The structure is deliberate. By grouping similar activities together, Musk reduces what economists call switching costs, the productivity losses that come from shifting focus between unrelated tasks. This allows for what's known as deep work, sustained concentration on complex, high-value problems. From an economic perspective, this is an allocation of a scarce resource, his time. In founder-led, innovation-driven firms, the leader's direct engagement in engineering or design can have a measurable impact on project timelines, investor confidence, and market positioning. In effect, his schedule functions as a capital deployment strategy. Only instead of dollars, the currency is hours. Yet, such intensity is not without vulnerabilities. Concentrating decision-making power in one individual creates a single point of failure. If that individual's capacity declines, the entire organization can be exposed. Sustaining extreme workweeks can increase the risk of burnout, cognitive fatigue, and slower reaction times. History offers cases where overextension at the top led to costly strategic miscalculations. There's also the question of adaptability. Industries like electric vehicles and space technology are volatile, shaped by regulation, competition, and technological shifts. A schedule so tightly packed can leave little room for sudden strategic pivots, something critical when markets move quickly. For policymakers, Musk's approach raises a broader issue: how leadership time is deployed in high-growth sectors. When a single leader's output becomes a bottleneck, the challenge is to expand organizational capacity without diluting strategic clarity. For investors and corporate strategists, Musk's example shows the potential upside of disciplined scheduling in accelerating innovation. But it also reinforces the importance of succession planning and decentralized decision-making. At a policy level, ecosystems that nurture high-output leadership through infrastructure, talent development, and R&D incentives can multiply the economic returns of such productivity models. Elon Musk's daily routine is an extreme case study in the economics of time. It demonstrates how a leader's structured allocation of hours can drive innovation and execution at unprecedented scale. But it also serves as a reminder: sustainability, adaptability, and institutional resilience must balance intensity. The lesson is not to copy the exact schedule, but to treat time as the scarce strategic asset it truly is. The real question is how each individual, or organization, allocates its finite hours. Viewers are invited to share their own approaches to time management in the comments. And for those interested in exploring the intersection of leadership, productivity, and economic impact, there are more in-depth analyses available on this channel.